What's good, people? Happy Thursday to all. Made it through another week. And I guess I'll give people some time to get in here because I know a lot of people just wait for the notification through the YouTube, I guess. Because people really only show up until after I start the stream, never at the point at which I started, which makes sense. So, give people a little bit. It was a wild day today. A lot of stuff going on. Market whipped. What's going on, homie? Market whipped and all of that. Kind of as expected. Just not how so at least I expected. Uh, so yeah, man. Interesting stuff. We're gonna take a look at what's really good. Just gonna log these closing prices for the day real quick. And then we'll get to the news and whatnots and get to the charts and take a look at today's activity. Um, I guess the big story, I mean, there's a few big stories, really. You got Nvidia going on today. You got housing numbers were crazy today. Um, and then you also have the GDP surprise. And then you have wait, 375. Then you have the like these companies reporting reality, which is rarely the case. So it's interesting right now. It's real interesting just to see how things are shaking out because they have to. They have to. Um, the scam can only go on but for so long. At some point, it has to end, and the question is when. And the answer is as soon as everybody realizes it's a scam. I mean, it's that simple. As complicated as it is, it's really also that simple. So, I don't know, man. People like to live in this alternate reality, that is not a reality. And then the world doesn't really give them what they want. That's a function of that reality. And it's because the world can't give you that. They literally can't. You got commercial real estate that we're literally at the part in the movie where Michael Burry's getting skull drugged because people are just now understanding, that they have to pay monthly or quarterly premiums on the position, and that's going to eat into their cash position. Like this is the part of the movie where we're at right before prices start dropping because we got the election coming, we got all these things lining up, so things have to look a certain way once the party starts in November. And I'm afraid to say, the more I analyze the situation objectively, not from my point of view, but from both sides. And I know it seems this way, and I just can't fathom how the fuck is gonna happen because there are no fighting parties on either side. There's just a lot of talk. All the people that are capable of fighting aren't with either side. They're like me, you know, like you guys. Like, I'm not gonna waste your time fucking waste dealing with that nonsense, fighting over fucking people that couldn't defend themselves when they had the ability to do so. So now we getting to the point where people think they have the right to tell other motherfuckers what's what just because of their political stance or affiliation. Complete crock of shit ultimately is what that is. But this is where people think no nobility lies or whatever the fuck they think it is. And they're about to learn a harsh lesson and you're a dumbass. You're not a fucking adult. You're a fucking little schmuck that doesn't know anything and has to be told what to think and how to think because you can't fucking read anything and interpret it your damn self. It's disgusting, really. And these people think they deserve respect and that they're adults and all of this crap. Like, man, get out of here. You can't even go walk a mile without dying. Fucking putz. And I mean, I don't know where these people come off thinking they deserve any respect, but you gets none. All right, so let's start off with the biggest story of the day, or at least for me. Buyer strike deepens. Pending home sales drop to record low despite surging supply and much lower mortgage rates that have already priced in massive rate cuts. But here's the thing, we got a long way to go, guys. We got a long way to go before things actually start getting funky in the way that we can start smiling because prices are correcting. Because you have to think there's got to be some type of price correction at some point. And if not in the stock market and the real estate market, at least in the real estate market. Because nothing makes sense. Like, stock shouldn't be up here after, 5%. I mean, it just don't belong up here. But then again, that's been true for the past 15 years. You know, I was one of those people that thought the stock market was never going to go up again. I thought that was the end of it because I understood the ramifications of what the fuck the problems were. What I didn't understand is how crooked the fucking system was. That was my rookie mistake. A mistake I'm never going to make again, obviously. Because now that I understand how the market works, meaning that the spigot is still turned on. So when it gets turned off, which we're close to that point. Once we get to that point, that's when it gets interesting because that's when everybody stops playing their game. All right. Pending home sales, a forward looking indicator of closed sales over the next couple of months, dropped by 5.5% in July from June and 8.5% from a year ago. We don't care about the index value, we just care that the shit dropped. And this is going back to sub 2012 levels. Rona was a unique point in time. It's important to note we've been at sub 2012 levels since 2022, mid 2022. So we're only now just progressively making new lows. Prediction of rise in sales during the summer amid much lower mortgage rates turned into the opposite. A sales recovery did not occur midsummer, is how they wrote it. So the NAR is this like I can't I don't know, I guess some bootleg real estate think tank or whatever, and they put out these little funky quarterly reports or whatever. And National Association of Realtors, yeah, there you go. I don't know if this is their data or what. I don't remember. Oh, yep, it is their data. Anyways, when they write their reports, they like never write anything negative. Like even if it's negative, they're gonna try to write it in a positive way. It's so ridiculous. Anyway, prices are way too high. Plus, wait and see. The positive impact of job growth and higher inventory cannot overcome affordability challenges and some degree of wait and see related to upcoming presidential election. No lower mortgage rates will drive up sales. The same thing NAR has said for months, despite the opposite of which has been happening. Current lower falling mortgage rates will no doubt bring buyers into the market, which we're just not seeing. So at one point, the 30-year rate was a hop, skip, and a jump from 8%. I think the high might have been like 7.8, 7.73, something like that, something crazy like that. And I don't remember what the long term historical average is. I think it's like 7 or 6%. It's one of these two. Thanks for the super chat, bro. I think it's these two or one of these two, but I can't really remember. Point is, we're up there from where we were for 20 years. 3%, or 15 years, 10 years, and valuations are higher, and then the interest rate is higher on that valuation, thereby making the cost ridiculously absorbent. And supply is apparently piling up, which is great. Let it crack, maybe let it crack. You know, there's nothing wrong with speculating in financial instruments, but I think that after seeing how there's like literally no rails for what makes sense and what doesn't, ultimately, a place like as big as the US should never experience what it's going through right now. If you understood how real estate markets worked, you would be in shock to discover what reality is, and how everybody's prices, whether we're talking about renting or a mortgage, are ridiculously high. Right? It doesn't matter where you're talking. And that's unheard of. You typically saw these things line up with respect to the local economy, and that's just not what's happening anymore. And I think we're seeing a combination of things causing this. 2020 caused a societal change in people's realization of what America was or is, because it definitely is not what it was at once in time. And I think that that's what we're seeing here, because we're seeing commercial real estate being abandoned, we're seeing residential real estate being abandoned, we're seeing all types of shit being abandoned in the US. Abandoned now, where people are still claiming things are good just because there's an election coming up. So, yeah, I don't know. I don't know. It's not looking good, and this is just the precursor. I mean, this is what you guys got to understand. This is the warm up. We're not even really warming up. We're just getting started, in all reality. Apple, Nvidia, eye investments in OpenAI as ChatGPT hits $100 billion valuation. Now, as you guys know, they're trying to act like AI can replace people. And in a lot of ways, it can replace people. But it ultimately will not replace us. The question is, how high skilled are you? And that's pretty much it. Because there's certain things that they're gonna claim that AI can do better than people, like be a lawyer and stuff like that. But nah, that's just not the case. A lot of things that they make claims are just not true. Like financial analysis, they're not gonna be able to do that with AI. They can make the claim that they can, but trading a stock and analyzing financial statements is just not the same thing. It's just not. So, people can say that they are, but no, they're not. So, a lot of this is just setting up what the future, whatever the future is that they want. Because if you look at Apple, Apple's done nothing innovative since Steve Jobs has died. It's just become a government quasi sponsored entity. It's just a government, it's just a quasi government entity. That's all Apple has become. And the interesting thing is when you look at every other facet of the tech Bros, all of them motherfuckers are doing the same thing. You think Mark Zuckerberg writing that letter is anything except a potential get out of jail for free card? Like that's all he's trying to get, drum up some favor with Trump because he sees that Trump is probably going to crush the competition. But what we don't know is what these people are going to do when they lose because it's obvious that they're going to lose. There is nobody that supports Biden or Kamala. Doesn't matter if they're black, doesn't matter if they're Hispanic, doesn't matter if they're Indian, doesn't matter if they're fucking Jamaican, Haitian, you fucking name them. The segment of the population that actually supports these individuals are almost the dumbest motherfuckers in the population, the most incapable motherfuckers in the population, the people that literally do not matter. So if they think they're going to be doing anything to anybody, LOL. I don't even know what else to say. I just laugh. These are the people that can't even fend for themselves. They need somebody to do it for them. So no, I'm not scared of you, motherfucker. You need food stamps to survive. You ain't scaring nobody. Sorry. You're like a Jew. You need handouts and shit. You're not scary. Oil jumps as Libyan oil shutdown deepens with loading halt at 5 main terminals. So as we were talking about crude yesterday, it was on the floor from where it had been, and we discussed that given the flat moving averages and the structure of the chart and all of that, probably was going to rally up again today, and that's kind of what we saw. Um, and let's just expand this chart here, give us the whole view. Let's zoom in a little bit here. So each candle is $130 of risk. Let me just do this right quick. All right. Yeah. So the idea is to highlight how when a market itself feels extended, it will recoil, right? And that's kind of what we saw from yesterday to today, and we talked a little bit about that. About how the market looked extended. It closed near an extreme, relatively low extreme area compared to the settle. And what do we get today? Well, we get a reversal essentially in between levels 2 and 3, which sported a support level yesterday as well. So just logical market structure, which we also pointed out yesterday at the open of the market while we were streaming. I think the market was like right here, and the idea was if the market broke this low, which it didn't, um, you know, it would keep rallying higher, and that's ultimately what we got. So, these levels are there to help provide a guide rail to what price action could be, and while we have price actually doing stuff, these are pivot points for how price likes to traverse time, right? If you look at what happened here, the market touched it, kind of played around this area. Let's zoom in a little bit more. Right, you had some activity in this area. All right, not as much as down here, obviously, but this area probably had the most activity out of all of this up to here. So out of a buck 50 in terms of an up move. Well, let me rephrase that. A buck 20 in terms of an up move. Most of the activity happened in this area. Those are the spots you want to find. Second most activity happened in this area. Those are the spots you want to find. Third most, well, this is actually the most activity. So it's not surprising, right? And let me throw up the fourth level actually. Uh, uh, uh. 76.60. All right. So the market's probably going to find a reason to reverse, unless it's really going to be gun ho about this move upward. Because what I learned here is that when the market does an extreme move relative to its expected range, definitely snaps back. Right? We see that here. We see that multiple instances through time. I just went back and looked. And if it doesn't snap back, what it does is like this: it chops sideways, right? And then it'll have to come back and recoil to test some type of high. And like the market has to find a reason to fall first, if that makes sense, right? And things can't go down unless they go up, and they can't go up unless they go down, if that makes sense, right? So if the market is indeed extended, but we didn't close up in this extended zone, right? But we didn't close in this extended zone either, and we still reversed. So you got to be cognizant of that, about how far the market moves and what the market structure looks like with regard to that. So, right now, the tone of the market is really bullish, right? When we zone out and we look at this daily chart, like you're looking at the volume is picking up, right? People are buying it. You look at the momentum, it's picking up, not slowing down, right? Volatility is decreasing, meaning that prices are more liable to go to the upside, right? And when you look at this back period of decreasing volatility, this is what you saw in prices, right? An increase in prices. So now you have the supporting fundamental picture that's gonna allow prices to find further reason to go up. So all these things happening. Um, and Libya ever since 2012 has just been a hot spot, and nothing changes in that regard because it just ain't gonna change anytime soon. The only person that was able to hold stuff in position is gone. So somebody else with the same type of balls is able to present themselves. That's pretty much just what it's going to be. And U.S. geopolitical hubris presents terrifying fat tail risks. Yeah, this is what I've been talking about for 14 fucking years. Literally 14 years. My God. So my first job, I got it 14 years ago in like 2 weeks. 14 years and 2 weeks ago. My first Wall Street job at a hedge fund. And I didn't realize that certain people just didn't look at macro. Because to me, that shit didn't make no motherfucking sense. Why the hell would you not do that? That's ridiculous. Why would you not care about what's going on? That's an external impact to, you know, whatever the fuck you think is good with this stock. I just didn't understand why you want to look at that. Anyway, so at that point in time, it was apparent to me, given what the U.S. had just done with the bankruptcy courts and the US dollar, that this was a one-way train. And unfortunately, I just didn't grasp all of the factors at the time like I do now. Because, at the time, if I would have understood them, it would have been clear that Bitcoin at zero was a fucking present. But it wasn't clear to me at that time. So I didn't understand that. I didn't play it that way. Hell, at that time, I didn't even play it at all. Didn't play it until a couple years after. And that's a story that many people have. That's not even an uncommon story. It's a common story. So, if you think you understand crypto, I'm going to tell you something. The reality of the world is such that right now that maybe 5 people actually do. And they're not the people that got into Bitcoin first and are famous. Because all of those people are anti crypto now. So they will be man, what's the phrase of those type of people? That they're like first adopters, but they fall off because they're morons and don't actually know anything. They just got lucky. They're really like lottery winners. And people that don't keep true to the cypherpunk principles are not gonna make it. Because all that you're experiencing right now is just literally a math win. And nobody understands that. You think that being up in USD means something, but you're not grasping this aspect of the problem right here that's in front of your face, the geopolitical hubris and the fat tail risk that literally balloons bigger and bigger every day because of that precise thought process. The hubris, thinking that dollars is where it's at without understanding why it's not, without understanding what diversification really is, without respecting the fact that you don't know what you don't know. Look at where the market is now as far as the dollar goes. The dollar, it rebounded again today. But let's look at a 5-day chart. Holding on to dear life, right? That's what it looks like. Let's zoom out 13 days. While it's holding on to dear life, the further out you zoom in that picture, the uglier it gets because the momentum is up. The momentum is rolling over. It's decreasing into a rolling over momentum, meaning it's going to go lower instead of continuous trend higher. Volatility is picking up, as you can see in the lowest panel, lowest pane. When it goes down, that means volatility is picking up. So the fact that this line is sloping downward is not a good thing for prices, and that's what you're seeing on the chart. So it's a combination of several things. And we're going to close out the segment with what I think is really the most important story and theme, especially macro theme, into the market moving forward to 2025, because we're entering Q1 already. Q4 is what is this? 30 days away. 30 days away, folks. 30 days away, and we're gonna touch on why this dollar moved up today, because it's actually funny once you learn the math. Let's see here. Thursday. Today's Thursday, right? Yeah. So check this out. Today's core PCE prices higher, lower than prior. Forecast 2.9, still pretty fucking high. Cause guess what? Guess what? The level is 2%, not 2.8, not 2.1, 2. So if we're above 2, means you got to cut. GDP growth rate 3%. The prior was 1.4. How the fuck they miss a 100% increase in GDP year over year? Pretty big miss. Initial jobless claims prior 233, forecast 232, magically almost in line. But let's not forget, looking back a year, the economy is actually short 818,000 jobs. There's so many things going on. that we have to talk about these things every day. And thank you for this quote. Interestingly enough, this is not RH's quote. This is a common quote that's tied to the market. And I can't remember who the hell said it first, but this is common knowledge. The market can be irrational longer than people can not go broke. Meaning, all the fools selling their PLS, their HEX, their INC, their PLSX, all they're doing is giving people that understand the problem the opportunity to pick up the gold, the digital gold. Because what is going to change about the world that we can, what could we actually forecast that could allow us to think that the digital world is just going to disappear? I'm hard pressed to think that's going to happen. I don't know about you guys. Let me know what you think in the comments and in the chat. But I'm hard pressed to think that we're going to lose this digital reality that we live in. That's not to say that we're going to go full throttle in the metaverse. I don't think that either. I just think that people are realizing that we're using technology wrong and we might find ourselves pivoting into proper use of technology. That's what I'm thinking. Because I'm one of those people that doesn't let young folk just be on that digital shit all the time. I don't do it. No, we doing shit. We physically doing shit. That's what we're doing. And eventually, them little asses is gonna come run miles. Cause you gotta be ready. And there's no better way to get ready than putting your body through constant physical torture. That's what running is to me. So that's one of the reasons I enjoy it. Challenge yourself constantly. I'm not on that Goggins shit, but you know, when I discovered Goggins, I was already doing that type of shit. So he's not really no inspiration or whatever like he is for a lot of people, which is cool. Whatever works for you. Just make sure you put in the work. That's all you got to do. And improve relative to yourself. There is no competition. There is nobody to compare yourself to. MJ became MJ because he wasn't competing against anybody. He was beating himself. Kobe, same deal, right? All the greats were better than themselves, not better than the next guy. And I think if people understood that more holistically, their lives would be a little different. It's gonna be like a movie, right? I never even seen that, but I've heard about it. And what's interesting? Life is already that. People don't realize that you are already playing a first player game. You look through your eyes. You're already in the player. You, your brain and your spinal cord. That's what the sperm is. That's what you were. That's what you were. You're always the same thing. You never really change. You're just in this exoskeleton that's called the body. And you just don't view it that way. But that's really what's going on here, folks. And your bank account is how life keeps score. It's not even the shit you got. It's your bank account. Because the shit you got ain't liquid. So, you gotta start playing the game right. You know, Tally up those points, save, figure out ways to not spend money, eat out once a week, eat out only when you get paid, shit like that. Think about it. Like, we're already living in a video game. It's crazy to think, but man, what the fuck else is this? It don't make no sense otherwise. Like, when you think about it like that, it really doesn't make any sense. All right, now let's get back to this economic data. So GDP came in higher than expected, higher than forecast, higher than previous, right? Now, that's literally not possible only if you're trashing the dollar for the past 90 days. Let's do some math. Wait, let's see. That was for Q2, right? Q2 is end of March through April. So here we go. April 1st. That's the open. Through the end of July. The end of June. End of June. Perfect. That's what they wanted, baby. They did it a little too late though. That's the reality. So the dollar is only down 60 basis points for the quarter, but you got to understand they don't use the futures markets to price these goods and services. They use some other amalgamation of an index. And this is the thing that people don't know and is almost impossible to understand unless you're in the business. You can have a million. All right, let me do this. Look at this. One, two, three, four, five, six, seven. That's just seven different versions of the same thing right here without me even scrolling anywhere. So imagine in the real world where everybody's doing their own thing and regulators don't really get involved. They just make the claim that they do. So things to think about, guys. All right, now let's look at what's happened from August 1st to present day. Minus 3% drop. So imagine what that Q3 GDP is going to look like if this trend continues. Because this is what people don't realize, right? We're talking about Q2 2024, right? Let's look at Q2 2023. This it. This is it right here. Because it's quarter over that. Here's April. Where's April 1st? All right, so it's Monday the 3rd, and it was a down. So July or June. There we go. Wait, did I think about that right? It's April, May, June, end of June. I did the calculation wrong over there. Hold on. I always mess that up. I don't know why. All right. Man, snap too. What's up with the magnet? All right. 30 bips down. Let me fix this over here. Wait, no, this looks like it should be right. No? Yeah, no, that's wrong. Uh Come on, come on. Ah, yes, this is right. Here we go. Bam. All right, now let me get. So up 1.25%. I was way off versus what I thought I was doing over here. Let's see. July 1st, that's the open. Down, ouch, 4%. Woof, so far in the quarter to date. All right, so we're up 1.25. Yo, they straight up fucking lying. All right, think about this, folks. Think about this. Let's say you lost some weight last year, all right? But now all of a sudden you gain some weight. How you running faster? Literally not possible, and that's what the government's claiming. So they're just lying, whatever. We're just gonna ignore. This is one of the reasons I don't like talking about economic data because once you do it, the math, it don't make no damn sense. Now, GDP is a number that nominally speaking always goes up. Meaning anytime it's in dollars, it always goes up. Let me show you guys what I mean. GD nominal GDP chart, St. Louis. This is basically what I mean. This is the dollar format of that data point. And what's being reported is the rates of change. that happen from quarter to quarter, month to month, year to year, whatever it is. Yeah, a lot of people don't know about that. So, speaking of Kobe, he sued a large company that made opiates. He didn't want them to use his name. Then he died in a helicopter crash. Yeah, some people think he might have been killed. Yeah, it's a. I thought he was killed, but not for that reason. uh, but yeah, so this is what I mean. And what you see reported is just the variations in this number quarter to quarter, which is not really that valid of a reading, especially when uh, everything else is false or a farce. All right. So we already talked about this. This is the biggest tail risk. People not understanding the reality of the economic picture in the U.S. and how the world views the U.S. and what's coming for the U.S. because the bill is due, and unfortunately, it's time to pay. OpenAI agrees to run GPT model past U.S. government to evaluate, in quotes, for safety. Now, I don't know about you guys, but I know for a fact the feds don't have any AI experts. None. And yes, if you're liking and enjoying the show so far, 42 minutes in, make sure you hit the like and subscribe. And don't forget, we're about real crypto here. We don't have to pretend. So Q2 unexpectedly revised higher on bizarre surge in personal consumption. That's why it doesn't make sense. Bam, I forgot about this story. I was going to look into it, and I just never did. According to the Bureau of Economic Analysis, that's what BEA stands for, Q2 GDP was revised to 3% from 2.8, from the 2.8 advanced estimate, and beat estimates of a 2.8 print. That's what the 3% implies. Oh, what is going on? What are these people doing? All right. The number was more than double the 1.4% growth reported in Q1 and was driven almost entirely by a bizarro surge in personal consumption, which jumped 2.9%, up from, up from 2.3% in the first estimate, and smashed consensus estimates of a 2.2 print. That's right. Just moments after Dollar General nuked its outlook. You guys know Dollar General, the dollar store, blaming a financially constrained core consumer, us, regular folks, which in this day and age is pretty much anyone in what was once the U.S. middle class. The BEA reported that personal consumption was a Six Sigma beat to expectations. Imagine. Oh my God, what a joke. I can't believe I've devoted my life to this shit. You guys don't understand. I at one point I was dead set on being an economist, and I really considered it seriously again, just because fuck how lame the subject matter is. But Jesus, it's just nah. I couldn't. I can't. It's just no. There's no way. I just couldn't. It's just this is the shit. This is just come on. Imagine being okay, so this is worse than being 6x off. All right, that's what Six Sigma means. It means you're way fucking off. Contributions to percentage change in real GDP in the second quarter. Consumer spending apparently was the biggest contributor, with inventory investment being the second biggest, with business investment being the third, state and local government spending fourth, federal fifth, exports, housing, and imports being housing investments and imports being the only negative reads, with exports being actually positive. So that's how that shook out. And this is the component by component breakdown. If you look at the bottom of the chart, you have color coded legend here, personal consumption expenditures in a, I guess you could say, some type of blue. Change in private inventories in green, imports in some type of teal, fixed investment in red, exports in purple, and government expenditures in orange. So if you look at the Q2 first estimate and second estimate, fixed investment shrunk, personal consumption grew, imports stayed the same, exports shrunk, and it looks like government consumption expenditures also shrunk a bit. Um, and yeah, that's pretty much it. So that's quite something. It doesn't add up at all. When you look at the overall picture, you got to just assume these people align. Goldman Sachs says Five Below earnings indicate, quote, core customer pressured and is reducing the discretionary spending. So first we have sites or rumbles from Dollar General, and now another store, similar, Five Below. When does it end? Yeah, good question, right? When do we start shorting these obvious stocks that probably aren't selling as good as they once were? So Five Below, highlighting mixed consumer trends, discounted retailer. Five Below reported a smaller than expected decline in second quarter comparable sales, beating analyst projections tracked by Bloomberg. Although the company lowered its full year comparable sales forecast, it still exceeded analyst expectations. Uh, we can, I guess, go over the snapshot. They beat net sales by 9.4% year over year. Comparable sales, however, were down 5.7%, but they came in higher than the expected 6.4% down. EPS was 84 cents. What? 60 cents versus 54 cents. Total location count, meaning stores being open, 7 higher than the estimate. Stores opening, 2 higher than the estimate. Um, and that's the second quarter results. Forecasts, whatever. I guess I could see why they dumped them. Because after these results, it looks like the next third quarter that they're going to report, which is the one we're in now, is the one that's going to bring a lot of problems. And that's the one that the fourth quarter is going to react to. So now you know how the things, go. And as you guys can see here, looks like the peak in transactions for this entity Five Below, at least as far as rate of change goes, was Q2 2023. And it's just been downhill ever since. So, yeah, that's what's going on there. Dollar General, top story, crashes, most on record after management warns of financially constrained core consumer. So this was a big story today. This was a $260 stock at one point. Now it's under $100, probably lower. We'll take a look. We'll drop the ticker in there just for shits and giggles. Dollar General sinks 26% and record drop on sales outlook cut. I mean, this is the lowest of the lows. When I was learning the game, one of the first things that I learned that was obvious was substitute economics. When people start hurting, they got to go figure out ways to make their money stretch and not spending as nicely as they once were, right? They're buying the spam and all of that, whatever. They're just finding ways to spend less to get by, whatever it takes. Ramen noodles versus rice, blah, 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 whatever it is. If things are really, really bad. Are things so bad that the dollar stores are going fucking bust? I mean, what does that say? I don't know exactly just yet, but we're gonna find out. That's for sure. How many dollar store general stores are there in the United States? Let's see. 18,912 locations, 8,088 cities, 48 states and territories, 4 average rating. I'm guessing it means 4 per city. Wow. The city with the most dollar stores or Dollar General locations is San Antonio. That's crazy. Can't even imagine that shit. Oof, all the junkies that must exist out there. That's all I can think of. Holy smokes. All right, let's take a look at this Dollar General just to see what's going on with that. Woo! Damn! That thing ugly. Ouch. Ouch. 262 is the all-time high on this puppy. Now, the stock is merely what 75% drop from hitting his all-time low. All it took was 14 years. Horrible economic policy and the Biden Harris administration. That's all it took. Ah. Oh shit. Oh man, that is funny. Yeah, that gap is just today, bro. Let me get rid of these lines. Maybe it's a little confusing looking with all these lines on here. Let me get rid of these motherfuckers. Oh man, and check it out. It's gapped down before, gapped down again, filled it, but then no way were you getting it back. No way. Oh man, this is a. If you're looking for a stock to short, this looks like a good candidate. Cause damn, I mean, talk about low expectations. Look, I tell you what. What I do like about this stock specifically is that eventually it's going to bottom out. Eventually, people are going to start talking about bankruptcy. Eventually it's going to go to the worst possible realms that you can consider things going for this company in terms of rumor mills and price stock action and shit like that. And my personal favorite stock plays are those that are apparently going out of business, but they're not. So if the stock, does go to single digits and it does take a couple of years to bottom out, you know, be advised that's going to probably be a issue to pick up at that point in time because people will always overreact. It's what we do best. So yeah, you mean that your First Republic? You mean that bank from like April or whatever? Yeah. Um, pretty nasty. Pretty nasty. I mean, 32% is the read on this, and let's see what it's doing post market. Up, it's up 7 cents post market. Oh man, yeah. So this is what Dollar General is doing. And what's interesting is everybody was really focused on Nvidia, and true to form, the market got blindsided because the market is built that way, and this is the main thing people need to learn. If you learn nothing else from me, learn that. The market is built to blindside you. Everybody was focused on this, but the biggest money was made in whoever had puts on Dollar General. How about that? I mean, damn. Talk about freaking crazy. And then Five Below, I don't know what the ticker is for that one. Five. All right. Let's see what this looks like. Not even bad compared to the other one. I guess the market already priced in what it already knew was coming because it's been selling off all year. So just another retailer that's just hitting the dump, and it's on Nasdaq. Like, why? I don't even understand that. The fuck. It's one of the reasons I don't mess with stocks, man, because shit just don't, whatever they do over there just don't make no damn sense. Like, why in the hell is this thing on the Nasdaq? The Nasdaq is for tech companies, but this is not a tech company. It's a fucking discount store. It's morons. Dollar Tree is another one. Let's see what this shit looks like. All right. All right, all right. I overplayed my hand here, acting like I knew how to use this. How can I get back to my chart? Is it this? All right. Dollar Tree, another one. I mean, it makes sense that it's gonna run in line with whatever the narrative is for Dollar General, right? Big Lots is the other one. Let's see what it looks like. Can you get out of here? No. What the hell? All right. Big Lots. Oof. 55 cents. Damn. Okay. So Big Lots is one I'd like to keep an eye on. Uh, cause it's just one of those. Um, yeah. I mean, damn. 55 cents. How low can we go? You know. And I mean, just think about it, guys. If you don't know what options are, learn about them. But long story short, you would essentially want to buy like, assuming this is like the bottom, the most pessimistic point in the existence of the stock and stuff like that. This is a hypothetical. Let's pretend this is the bottom. What would be better to buy? The actual stock or options on the stock already in the money at this price? I mean, imagine buying, assuming they have a quarter strike, assuming they even have options. I really don't know if they even have options. But if they did, I know what the dream play would be. Shit. Can't really tell if this stock is optionable because this is pretty cheap, so it could not be just based on that alone. But that's a look at those issues. The Nasdaq, it whipped around as expected today, just not how I expected it to whip around. It filled that gap and then some, and even went all the way back to that resistance line again. It keeps tagging that 681 level, and just chopping around and playing, you know, with that. It's crazy. Let me show you guys what. Whoa, what the hell? Oh, I didn't realize it was opening other tabs. Probably should have checked. All right, whatever. All right, Nasdaq. Here we go. Let's go to the 89. Yep. So, like I told you guys yesterday, the volatility readings are very high, and as such, we were given a big range to work with today, and that's what you're seeing on the chart. If you consider just from a dollar value perspective what the opportunity range is for the day, let me break it down for you in a second. Um, the low for the day was 140, 19,140. And the high of the day was 693. So we'll take the difference of the two. 693 minus 141. I guess somebody's riding a cart down the hill here. You multiply that number by the value of every point, and that's $11,000. Top to bottom, right? That means at any point, every candle that you're looking on this chart right here, in front of your face right now, is worth $445. Each candle that you're looking at right now, $445. So just think about that. And they're all equivalently distant, meaning in height. So they might traverse the same range, but they are all the same height, even if they are in the same zone. So 89 ticks no matter what. But that's what that candle bar is going to grab. So that's $445 of risk per candle every time it prints one, right? So if you zoom in, say to 10 ticks, 10 per candle, and this automatically becomes 20 or $200. Oh, I'm sorry. We're talking about ticks. So it's actually $50, not points. $50 per candle, right? And this is for the regular contract, not the micro one, which is divided by 10. So if we're talking about the micro contract, well, then that becomes $5 per candle on this chart at 10 ticks, because it's 50 cents per tick. And that's 50 cents times 10. That's $5. So that'd be like 50 half dollars, right? So, or 10 half dollars, which will give you $5. So, think about that. That's the kind of opportunity that exists in real markets, and people are out here taking these crazy risks in crypto, not even knowing if they're going to get their money back. That shit is crazy to me. Oh, word. Yeah, you want to look at Coca-Cola. Hold on. Forgot about that. Ooh, shit. Let's look at the 55 day, because this is an old ass stock, man. Damn, that thing look like it got some wings, though, bro. I don't know. It doesn't really look like it's going to stop running. Fuck. This thing is crazy. Damn. I mean, look at this thing. No fear. This stock, yo, now I see why Warren Buffett only buys this shit. I mean, I think this is one of his biggest positions, and I don't remember, but I know at one point it definitely was. But I see fucking why. God damn. And this shit pays a dividend too. What a dividend at? 2.60%. It's pretty weak right now, but I'm sure at one point it was better than that. Holy shit. This is crazy. I mean, look at that. This is from most of us weren't even born in 1980, fucking 1980. I know I wasn't. Look at that stock, man. No wonder that dude rich as fuck. He fucking loaded up at 60 cents and said, fuck y'all. I mean, I can't believe. Look at this. Talk about free 99. Wow. Look at that. I mean, this is just a one-way freight train. Look at this. And as I look at this now, it looks like they've never done any splits. Do I just not have the events highlighted on the chart? Hold on. Because I know that's wrong. hell going on here? Okay. Yeah. What? Oh, it's probably too far out. Yeah. Yep. Was just too far out. Yeah, I'm sure they done splits and whatnot. And if we looked it up, we'd find it. Um, but yeah. There you go. 11 times they have split. So there's that. Yeah. So let's get back to the next thing. See, this is the deal, guys. This is the deal. When you're trying to come up from nothing, you got a couple of options, literally. You either take small risk and be methodical as all hell and not risk, like you can make $1 million out of $100 if you're patient, selective, and thoughtful about your risk taking. You literally can. But if you're just impulsive, not methodical, not thinking through what you're doing, yeah, reconsider that put, homie. I don't think that's a winning strategy just yet. Oh man. Yeah, yo. What's funny? What's funny? Uh Coca-Cola has a lot of industrial uses. You can clean a lot of shit with that. Like spick and span. And a lot of people don't really know that, but if you're a mechanic, any type, you know. If you know type of thing, that's what that is. Oh, well then you know. Yeah, that's right. It'll keep that thing fresh, baby. I mean, it'll make that thing look like it's brand new. It's crazy. People ingest that. What are you gonna do? So the reading yesterday I got was a little elevated, and it was so elevated that the market really just respected um essentially the most of the range for yesterday. But if you zoom out and look at yesterday's range, we really stayed within essentially yesterday's range. We really only saw anything below yesterday's range get bought up, right? That's what we saw. And then today on the reversal, after the market went back through settlement, tested it at support. You see, this is what I was talking about earlier, guys, with these levels. Started off the stream kind of talking about this. How the market stopped for a second here, paused, right? And then it just gyrated through here. But then it came back and tested it again. You see, because you can say that same thing about here, but it's about the space and distance that you get to operate here, right? You don't get that space and distance here. If you missed it, you missed it. But here, you see the market just touch, go, come back with plenty of time in between. 5 o'clock in the morning, 6:15. You had a whole 2 hours. You had a whole 2 hours to set up for this trade, and you could have crushed it. Getting long from, let's see here, 4:15. Yep, probably could have got long nicely from 4:20, which is the moving average. You always want to stay near the moving average. You don't really want to try to be slick and overcompensate because the moving average don't care. It's there to stop. It's there to block you. Like that old school. Y'all remember that old school parental control commercial, cable commercial? Yeah, those commercials were some of the better commercials that we probably ever had in our lifetime. I'm gonna have to block you. I don't know if you guys remember those, but me and my sister still make fun of anything with that because that shit is just funny. I'm gonna have to block you. Oh, you're being a cornball? I'm gonna have to block you. You don't know how to read? Well, I'm gonna have to block you. Basic stuff like that. Oh yeah, do you know where your kids are? It's 10 p.m. That was a good one. Yeah. 418, 419. I remember when I was a kid, man. I used to be thirst, and I mean little, to be just outside doing nothing. Just because I used to see other people doing that. Like, damn, it's crazy the shit we think is cool as kids because we dumb as fuck. We don't know no better. All right, so you could have got in, right? The low here was 419, 418, and you could have comfortably got in at 425, respecting the top end of this level. Because the range is typically 20 points when I lay them out for the NASDAQ. And I typically like to take 10 to 15 points of risk, because if the market is going to reverse and you're good with your entry, you don't need more than that. Um, and if you stick to that moving average, you probably could have done good with an entry right below 425 and above that moving average with a nice clean stop somewhere below that mid-range area, and you would have never seen any heat, and you would have caked, a nice 150 points. Multiply that by two, that's 3,000 per contract in one day by 10 a.m. And if you really want to be quick, 10 a.m. on the spot, and not even 10:50, 10 a.m. Right, and that's kind of how futures works. You don't want to get married. You don't want to be in there all day. You want to just find the trade, execute it if you find a good trade, because you're not always gonna find a good trade. I mean, look at this. The average person wants to trade this, and if they miss this, the crossover, this crossover area, this crossover trade, they think trade is over. But and we talked about this move last night as it was going up, and I commented, it looks like it's just gonna keep going, but it's a pretty bearish open. So if it doesn't fill this area, which it did, then it's going to continue, which it did not. I mean, and trading is literally that simple. Yo, I swear to you guys, it is not harder than that. Because guess what I did when that shit kept going? I bought. There's nothing else to do. And guess what the market kept doing? It kept going up. And all you gotta do is follow the moving averages. That's what the market is for. I mean, we're not hardwired for this shit. And that's why it's so hard at first. But once you realize that you're just making it harder than it needs to be, everything changes. So that's what we see from the market. And today, let's take a bigger picture view of the market real quick. Give me a second, guys. Just want to harp on something really quick. We did talk about this area down here yesterday. The market did end up supporting, right? We talked about this. The market ended up supporting price action here. And this is why, we see support. This is why the market rebounded. Doesn't mean the market didn't come back up, right? Find supply again at that 681, 690 area, sell off, right? Potentially find support again because, yeah, that was a bullish move. But guess what? Now the market found supply and it has to contend with this area. It has to find structure here. And if it falls, right, it's not a good look because it's looking very, very weak right now. My money is on continued downside. If I had to take a long-term position on the market right now, it would be lower because I'm banking on the smaller time frames being in control right now. And if that doesn't end up being the case, then I know that I'm wrong as soon as market gets above that yellow moving average 500 right now, right? Because I'm keeping a daily bias from the market with respect to what it's doing. I don't want to take any guesses. I want the market to tell me what's right and what's wrong That's what I want to do. So if I understand the market is picking up volatility right now, that was obvious. Excuse me. That was obvious yesterday, right? But look at what happened today. Today, volatility roll right back up. Like if it wasn't going down. Look at that. That reading is for yesterday, Wednesday, 6 p.m. Today is Thursday, about to be 8 o'clock Eastern. Let's zoom in a little bit further. Same time, yesterday, 6 p.m. Let's zoom in on the hourly rate. Boom. We hit 100 on the Richter scale at an hourly level as far as volatility goes. And this is one of the reasons that the market has pushed back. It just went too fast, too hard on an hourly basis. And when we look at the volatility read for the 89-minute mark, 89-minute time frame, we just hit sub 68%. And again, this is out of 100. So going to 100 means we've hit a wall and prices got to figure something out. And if they're crashing, well, they're just going to keep fucking going. And if they're not, then they're going to reverse. And this is what's happened here. So now the question is, what does the VIX say? All right. And if we look at just the plain old VIX, it looks like it's selling off right now. And it even looks very weak. Right. So the market looks like it's poised to recover from a volatility basis because it has this internal or interim support. But let's keep in mind that the moving averages are above the price, the short-term moving averages, and the long-term moving averages are also now above the price. And the thing to keep in mind is we went below once, came back, retested, and we're below again. So it's not a great look with respect to market structure and its bullish stance right now. But as we talked about yesterday, right, we have this area here supporting the market. And I guess that's what we need to focus on for now because that's what the market seems to be focusing on. Right. And that's pretty much how you got to play this game, guys. There's no more than that. Right. And if we see another area of potential support resistance, it could be these two areas right here. Bam. And we could even draw another one. Right. So we'll just leave those there for now. We know where they came from. Actually, here's another area right here. I mean, I think if this area goes, that's it. That's all she wrote. Excuse me, guys. That was just my lighter. I think that's like near 19,000. Let's see. Yep, 925. Let's see what this is. 925.50. 922.50. So right in that little gap zone. Right, there's like a little gap here that the market has in between the 13th of August at 8:50 a.m. and the 14th of August at 10:19. There's something going on with the market right here that there's a little 3-point price gap. Right, it's so ridiculous, but that's how this shit works. So we're gonna mark 1924 as a level of importance. We're even gonna get rid of these levels below it. And we're just going to leave those couple levels right there because they're really the significant levels right now. I think if the market breaks these two levels and goes below, we're just going to lose it all, at least until down here, which is where another potential support area could form that makes logical sense with the market structure. But that's 17,800 basically. That's probably a good 5% below where we are right now. I don't really know. Let's see. Yep, even more, 8 to 9%. I clearly did no math on that. 8 to 8.5%. And again, it's just keeping in line with the daily picture. The daily picture is weak. We have compressing moving averages, right? When we're looking at the short term moving averages, not the yellow one, but the blue, the light blue, and the red one, those are 55 period and 89 period moving averages versus 144, which is the regular blue, and the white one at 233. So these are the long term moving averages. And, as you guys can tell, the trend pretty much respects those moving averages very well. So I use them as my rail guards for safety as far as what I should be considering trading and why, and how, right? So an important and interesting thing to note is how price is now between the short-term moving average, which is the daily bias one. So right now I need to be looking short for, based on my strategy and how I trade, I need to be looking for shorts. Um, and I have to be cognizant of the fact that price is actually above this long-term moving average at 55, even though it's really a short-term moving average compared to the real long-term ones, right? But long story short, I have to be cognizant of the fact that even though my daily bias is to the downside, the long-term moving averages are below my price. So I need to be wary of how I'm playing the market if I am stalking longs, because as we just saw, the market is indeed structured short, right? So these are things we need to be aware of. Um, you gotta look at all time frames when you're looking at the market, and that's something that's not obvious to people. It wasn't obvious to me at first. When I first blew up an account, that's when I figured it out, because it stopped doing what it was doing, and I couldn't understand why. When I one day it just hit me, oh, I was just trading in this freaking microscope. S&P. I saw a trader compare S&P to ones looking like. Oh, you mean like an analog? I guess I could do that. Yeah, let me get through these charts and then we'll do that. The thing with that is that there's a lot of periods in time that look similar to other periods in time. And if you find that and you feel that that works for you because you feel that that makes sense to you, definitely trade it. But understand the risk that you're taking when you're trading something that's happened in the past. You're basically assuming that humans are going to react the same exact way to not exactly the same circumstances. And here's the thing, it's not that it's wrong because it could completely work out. I don't know if you guys are aware, but a person like Paul Tudor Jones, a big chunk of their strategy revolved around that back in the 80s, when understanding that was not commonplace. So it is something that works. And we're talking about 40, 50 years ago almost. So I guarantee you the people that use it are not $1 billion money managers. So you could probably go on ahead and use that successfully. So it's stuff like that. You can add it as a layer, a filtering layer, like it's just so many different ways. Man, this really looks like it's not gonna go above. There's so many different ways to take advantage of the market, so many ways to see what's happening. I advise you take advantage of all of them because they are all valid. There's a million different ways to make money in this market, and the smart money picks the most efficient ways that work for them, that they have confidence in and understand. They're not worried about what others are doing, other than when it comes to them becoming educated. So I hope that that makes sense. This is why I don't mind sharing what I look at. Even when I change what I look at, I share it. I don't care, because it doesn't matter. Ultimately, everybody has to pick their own way. So as we zoom in, what we have is a bullish zone here at 19,000, 380 through 390. 385 to 395 basically. So if the market loses this area, essentially 19,325, um, from the 400 level, and definitely loses the settlement area for tonight, which is 393, Actually, let's throw this on here just because. Why not? Um, futures and stocks, they are very driven by human interaction. I really don't know how to explain it other than that. Um, and I guess that people don't take the time to learn how humans make the world move. So because they don't do that, they can't really crack the codes correctly, to discover these types of things that you're seeing me produce on these charts. Like, look, you just saw, I don't know if you just noticed, but the market literally ticked down to this level right here, 405, right? 405 is 10 points above, well, 12 points above this mid range, right? But the thing you have to understand is that it's 10 points below this mid range over here. And because the session is still relatively young, the next one, the market actually still sticks to the previous day's levels, right? This is kind of what you see happening here. I mean, it literally stopped, dead stop at this level last night. Wasn't even 7 p.m. yet. It was still playing off of these levels. And it ripped right through this one, ripped right through that one, stopped at this one, came back and tested this one, which was really just this one today, which was today's settlement, coincidentally, which was based on yesterday's price action at this time. So the market really piggybacks off of itself to trade the following day. And that's really the best I could do in giving you any kind of secret sauce with regard to whatever these levels are. Because as you can see, they're spot on. They work. They're not a joke. These things are real. So understanding the market, why it does what it does, how it does it, those are the things that help you figure out the market. So let's go take a look. We already took a look at crude. Let's take a look at the S&P real quick because it's like looking at the same thing. So it should look the same. Oh, no, it does not. And this is why you look at everything. So check this out. S&P is above its short-term moving average, which is this 9-period EMA. And it's above all the other ones. So NASDAQ, which has been the leader, is bearish. And now, let's see if it's just the S&P is the only one. Nope. Dow Jones is bullish as far as daily bias is concerned. And the small caps, let's see if the mid caps are bullish as well. Yep. Well, hot dog. From a momentum perspective, they are looking relatively weak, but you got to play the averages. You can't go by that. Always defer to the averages when deciding on direction. So there you go. Bonds looked a little weaker today thanks to the strength of the dollar and the interesting GDP return reading that we got today. Um, and when you zoom in, oops, let's see what happened on an intraday basis. We're pretty much just, yeah, collapsed like a rock. Let me zoom in a little bit more. So bonds are a little different. They are 31.25 per tick. So right now you're looking at $93.75 for every candle that you see on this chart. And be advised, I think about these things in monetary terms. I don't think about them in dollar in just their ranges of whatever their prices, and whatever their price is. Uh, I look at things, at least I try to, from a risk perspective, so that I'm cognizant of what it is I'm liable of losing. Um, because that's the game we're playing here, folks. We're playing to make money, not give it away. So it's important that you keep that in mind as you sit out here trying to play these games that we play, because it's so easy to make money, but it's so easy to lose it too. And that's something that's very difficult for people to surpass, when it comes to learning how to play in these markets. And that's something you really got to get in tune with. You really got to gotta really surpass that ability to have confidence in your understanding. And it's like I told you guys before, I had this idea in my head probably 12 years ago, if not more. And only this year did I say, fuck it, let me just try and see what happens. And I feel like a moron, because that's the nature of the beast. Should have never waited to see if whatever I had in my brain was real or not. Should have just tried it. But because I didn't have confidence, I never did. And that's the moral of the story. Have confidence in yourself. Otherwise, why the hell are you even trying? Think about it. Why are you even trying? Who's supposed to fucking do it for you if you're not willing to do it for yourself? That's basically it. So that's the end result of this is the end result of that. So bonds, as you guys can see here, they were already under resistance. This is what the yellow means. And as soon as that, oh, the market was selling off before. So I guess by the time 8:30 rolled around, yep, it just gave it more of a reason to sell off. See, 8:30 is right here, which is in that nook. And typically, when markets are going to take off or roll over, they always do this nook and cranny thing, where there's some type of move that predates the actual move. That's like a precursor. And whether the market is up or down, you see it. Let's see if I can invert it. Yeah, same thing. Nasdaq does this type of thing, and this is the pullback. The pullback before the rip, which is the same thing as the pullback before the dump, is just inverted. And if you don't look at the one thing, I definitely recommend if you're having a hard time seeing the market in either direction is inverting that price scale. When you see a pattern that's obvious to you, definitely invert that chart, because you're giving yourself that same vision in the opposite direction that you think you can't see. But if you can see it in one vein, you can definitely see it in another. You're just not realizing the characteristics of what makes a market one way or the other. You're missing it, So you gotta catch that. You gotta catch that. So yeah, so bonds crapped on themselves, went all the way to the extreme level, so they're probably gonna reverse for tomorrow. Um, that's typically what happens, as we talked about earlier. So if you're looking to trade bonds, you probably want to look for longs, because again, all the moving averages, the way the market is set up to really take off. It really, really is. And if you really look at this is more of like a mini cup and handle than anything else, and it's already found the support here, and it keeps finding support higher. And this is probably the best area, coincidentally, to buy, with this being the last best area, and anything below that is just danger. So 116.28 through 117.04 and 120. Oh hell no. Nah, we're gonna go 121.08 through 121.04, and then if that fails, we gotta step back and see what the market does all the way down to 120 half, 120.11. Just watch it from that point, because if it misses that, it's probably gonna go all the way back down here, and if it misses this, then there's no telling what it's gonna do. At least for now, because it could easily find support here. But why the hell would you want to hold on from all the way up here? That makes no sense. So, this is futures. This ain't crypto. That's insane. You don't want to be doing that. So just things to be cognizant of with respect to that market. Let's take a look at what gold did, and that'll pretty much help us wrap this up, and then we'll do that analog setup that you guys want to look at. We'll wrap this up here. Gold, yeah, just floating, man. And I think this is these kind of markets are hard for me to trade, because you really got to wait for one of these periods where it's just hugging the line before it actually does a rip. And you just got to be super patient, and not let the market this will sway you. Just be patient, because that's the kind of market we're seeing right now, because this is just going to track the printing, and the printing is not going anywhere. So, yeah. All right, let's see. All right. So what I'm gonna do is I'm going to, where is this thing? Yep. I'm just gonna copy the pattern and see if actually, let me go to the weekly. Nah, probably doing it on something like that. All right. As you guys can see, it's not the only time the market is kind of looked like this. Kind of looks like this all the time. So yeah, it's not that interesting of a way to look at the market, in my opinion. But again, if it works, who gives a shit? Um, yeah, I guess not. I guess somewhat like it, but not quite, because this is what they're trying to say. I wouldn't think it's this one, although maybe it is. Who knows? Um, I don't know. Maybe it's the daily. If you can give me a time frame, I could probably reproduce it, because it's what people do all the time. I just don't look at the market like that, so I don't know the dates like that in order to reproduce that anyway. Uh, yep, that's a big problem, man. That is definitely a super huge issue. um, that's a very big issue. That's what essentially has us in this scenario right now. Has people thinking that somebody has to tell them how to live, or all that crazy stuff. I don't know, man. But we'll see what tomorrow brings. What's tomorrow? Friday? Oh no, I'll stream. Hold on, god damn it. Yeah, I'll stream again Sunday. Do a weekly stream, and we'll make that one a good one. You guys have a good weekend, and rest easy. Peace.